Enjoy the ride with Crystal Petrie, consulted, so inspiring. Wishing you to.
Hello, my name is Crystal Petrie, and welcome to another episode of 60 Minutes With. This week's episode is something that everyone needs to hear and know about: life insurance. If you are listening, if you are watching at some point in your life, I promise, I guarantee you're going to need life insurance. And here to educate us about the importance of life insurance, Marcus Castille. So welcome to the podcast, Marcus.
Thank you so much for having me, Crystal. It's my pleasure to be here.
Yes, so life insurance, I know when most people hear that, and I'm sure as my listeners are listening, they're thinking about death, because that's automatically is what I think, is what most people think about when we say the two words life insurance together. Explain to us, what is life insurance?
You know, the industry is so crazy. They actually changed the name to life insurance. It is actually death insurance.
Is it?
Yes, absolutely. Absolutely.
What?
Yes.
I've never heard that before.
Yes, absolutely. So, but it's simply put, life insurance is protection in the event that a person passes away.
So I'm assuming they changed the name from death insurance to life insurance because it's more tolerable.
It's marketable.
Yes.
Everybody wants life.
Everybody wants to live. You know, I hear this saying all the time: everybody wants to go to heaven, but nobody wants to die.
Nobody. That's the only way we get there.
Nobody wants to die. Okay, so what are the basic two, I guess, life insurance?
You put any name on it. All life insurances fall into two categories,
Okay.
and that's cash value or whole life and term insurance. So if you call it IUL, index universal life, you call it variable life, you call it whole life, permanent life insurance, it's a cash value policy. And then there is term insurance. And term simply means it's for a period of time.
And what is normally the term? Can the client pick the term, or does the insurance company pick the term?
Absolutely. So it depends on your age. For example, you can have different terms. Our company, you can pick 10-year term, you can pick a 20-year term, 25 or 30, and the max is 35 years.
Okay, and so when we're doing term, what happens once the 10-year term is over?
Okay, great question. So if you are my chair and you picked a 10-year term, I'm assuming based on your situation. For example, life insurance, what we teach, does not have to be for your whole life. It's for a period of time. When you're young and you're healthy, what happens is that's when you need the life insurance. The kids are young, you have a new mortgage, you just starting out on your job, you have a lot of bills. That's when you need the life insurance. So if you're picking a 10-year term, I'm thinking you have about 10 years before you retire, and you're going to have a whole lot of money based on what you're telling me, because at the end of the term, you don't need life insurance. What do you need? You need some money.
Okay.
So if you're picking a 10-year term, you definitely have done well. You have no bills by the end of the term. You planned out your life.
Whenever you get life insurance or death insurance, whatever we want to call it, you need to do it when you're younger, because a lot of people get it when they're older because, you know, they're thinking, okay, maybe, you know, I have a few less birthdays than what I have behind me. So they wait until they're older to get life insurance. But you're saying we need to get it while we're young and healthy, and kind of in the beginning of our lives.
Absolutely, because life insurance is based on your age and your health. Statistically, as we get older, our health declines. For example, you got the diabetes, you got high blood pressure. So you have these different medical conditions, high cholesterol, and life insurance will deny you instead of you denying it when you're younger. Okay, So again, buy it when you're young and healthy.
Mm-hmm.
Because when you get the policy issued, when you're young and healthy, you don't have to worry about, the insurance company declining because of health.
So you said the two basic is the whole life cash value and the term. The whole life, I'm assuming because it's in the name, covers you for your entire life, correct?
Absolutely. And that's the misnomer. That's the marketing of the industry. That's how life insurance. My parents bought whole life policies. Your parents bought whole life policies. That's how it was marketed. You're going to need life insurance for your whole life. Okay? It's a misnomer because based on the theory of decreasing responsibilities, you need life insurance when you're young. When you're old, at the end of your career, the mortgage is paid off, the kids are gone and grown. Okay, so therefore you don't need any more life insurance. You just basically need some money. So life insurance was meant for a period of time.
Mm-hmm.
So therefore that's where you say permanent life insurance or whole life insurance. So you pay for it your whole life, and it ended up with basic maybe $10,000 policy.
So you are saying, and you work in the industry,
Absolutely.
and we'll get to that you don't really need whole life insurance. What you really need is term life insurance.
Absolutely, 100%.
What? Okay, this is blowing my mind because you work in the industry, and I feel like you are taking away your sales.
I'm gonna get there.
Okay.
Because the industry makes a more profit on a whole life policy.
Okay.
It's for the agent, it's for the company. Let's say, for example, a whole life policy, you pay $150 for, let's say, a $20,000 policy, okay? Versus a term policy where you pay, let's say, $100, okay? Well, who's gonna make the most commission? The agent that sells the biggest premium, okay?
Yes.
So the industry markets for the whole life, the push. 9 out of 10 policies that are sold is whole life policies.
What? Okay. So if my listeners, which I know you've piqued their interest because you've piqued mine and I'm sitting here talking to you, if they want to reach out to you and get more information about buying what I would assume should be term life insurance, how can they do that, Marcus?
Sure, they can contact me at 409-466-5948, or they can reach out to me on social media, Marcus Castille on Facebook, or Money for Marcus on Instagram or TikTok.
And I will make sure and have all of his information in the description box below so people can reach out to you, because I feel like you're an anomaly. You are actually telling the truth about this industry, regardless to sales and everything else.
Absolutely. Our company was founded, the principle was founded based on the founder being sold his parents a policy, $10,000 or $20,000 on his parents, okay? When the agent can easily have sold them a term policy worth $100,000 or $200,000, and he barely got by when his parents died. So our crusade, our passion is to educate families and help them to make better financial choices.
So it's not just the life insurance, but it's also the financial literacy that you and your company, what is the name of your company?
Primerica.
Primerica, yes, are teaching and wanting to give. Okay, I did not know that. I'm learning something already, and we just got started.
Let's get it.
Let's get it. Okay, what does life insurance cover?
Okay, fantastic. There are so many types of insurance, okay? But there's marketed when you buy a house, it's credit life insurance, okay? Well, that covers the mortgage company in the event that you pass away. The mortgage will be paid off. However, life insurance, the basic essence is basically it covers the breadwinner in the event that they pass away. Let's take a family. They make, let's say, $50,000. We want to cover that income in the event that the family has to go on in the event of their death.
Okay.
So we want pure protection. Life insurance, in our eyes, is pure protection in the event that the breadwinner dies. It covers your your greatest asset, which is your income, in the event that you pass away.
And that brings up another question. Whenever you're purchasing life insurance, how do you know how much you need to get?
Okay, great question. So, let's say a family is earning $50,000. A person needs to get at least 10 times their gross income. So 10 times their gross income will cover a family at least maybe 10 years in the event that somebody passes away, to get their life together, just get their head on straight after the event that somebody passes away.
Okay, so Marcus, this is the first time I'm having to do math on air. So if I'm making, or the breadwinner, that could be the husband or the wife, is making $50,000, you're saying you need to get 10 times the $50,000 that they're making gross income. So that would be $500,000, correct?
Absolutely, yes.
And so that's how you know. So it's really basic math. Whatever the gross income is times 10 is how much you need to get in life insurance.
Exactly. And we don't value the husband over the wife. So
Thank you for that.
Yes. So let's say, for example, husband goes out every day, he's clocking in and clocking out, and he's making the $500,000. Well, how can I put a value on the wife who's staying at home, taking care of the kids?
That part, Marcus.
Yes, absolutely. There's no number to put. There's no value to put on that. So we don't devalue the husband over the wife. So
I appreciate that. You got my business.
Let's get it.
So one of the things that we were talking about before we came on our air, we were talking about a story where a man had passed away, and our family and friends are using GoFundMe to bury him. And I feel like GoFundMe is now being treated as the new life insurance, because with GoFundMe, you're asking community, family, friends, a lot of times strangers, to help bury someone. What do you think about that?
It's terrible. If you think about how much a policy is worth, or how much you have to pay for a policy, you can get $20,000 for little or no money, and then we have to figure out and put the burden on our community, the church, and different friends and family to bury somebody. It's burdensome. It's terrible.
Now, one of the things that you said, which I love, and I feel like it's going to stick with me, you said GoFundMe is not life insurance. And that's really how people now are portraying it. Because initially GoFundMe was for like maybe nonprofits or ideas, that passion projects people wanted to make a reality. But now whenever someone passes away, like 8 times out of 10, they have a GoFundMe attached with it. They even have it in the media now. So you'll see it on TV, in the newspapers, that GoFundMe account has been set up for this person. So GoFundMe is not
life insurance. Absolutely.
Yes. Does a life insurance depend on like a guesstimate of when someone is going to pass away?
Okay, great. The cost of life insurance is based on your age and your health, okay? And we're going to get there, but life insurance is different. The cost is different for a man and then a woman. So again, age and health determines the price of life insurance.
So if you are younger, as you talked about earlier, if you're younger, healthier, which we all assume that's the case, then your life insurance is cheaper, as opposed to if you're older and now you're having complications, then it's more expensive. Why the difference in price?
Well, it's mortality tables. Every insurance company has calculated the life expectancy of a person. They already know statistically men pass away faster than women. Okay, so they already know that our rates will be higher than a female because women live longer. So it's based on the mortality tables. That's not going to change a whole lot in our industry.
Is there anything that life insurance does not cover?
Again, if it's pure life insurance, if you pass away, the company has to pay. There are some details and misconceptions. For example, it takes 2 years for the policy to, I guess, come in play. Well, that's not technically correct. For example, if a person lies on their application or commits suicide, they only get their premiums paid, okay, if it's under that 2-year period, okay. But after the 2-year, we call incontestability period, if you pass away any cause, you're protected. There are different policies like accidental policies, disability policies. That's not exactly the type of life insurance that we offer. We recommend that you buy a permanent policy if you pass away of anything. Once that policy is issued, the company has to pay. It's a contract between you and the company.
So even if someone gets life insurance on a Monday, they pass away on a Tuesday, then the company still has to pay?
Absolutely. I had a story of my cousins. They called me up on a Christmas Eve, and they wanted to get a policy on my family member, my aunt. She smoked her whole life, Crystal. Never had cancer, never had any issues, but within a year and a half, she developed lung cancer. Under the 2-year incontestability period. The company investigated. They did affidavits on the whole family. And lo and behold, the company paid because, again, it's a contract between the company and the insurer.
Okay, so Marcus, this is something that I've heard and I've read about with whole life insurance. And so we are, if you've been watching since we started, you should understand whole life insurance or cash life insurance. That people can use that as investment, right?
Absolutely. And we feel that, well, let me say personally, my conviction is that people that sell life insurance as an investment is the biggest mistake they could ever make.
And why is that?
So here's how those policies work, okay? Now, Crystal, you look really sharp.
Thank
Okay?
you.
Yes, absolutely. If you're paying $225 for a whole life policy, okay, that's approximately $3,000 a year. And I tell you, at the end of that, let's say 5-year period, you don't have any cash in that policy. How would that make you feel?
Like, what happened?
But that's exactly how these policies work. Now, secondly, if you need your money, let's say you need to borrow your money, first of all, how do you feel about borrowing your own money?
I should not have to borrow my money.
But when you borrow from your policy, let's say you had a $100,000 policy, it decreases the face amount. If you borrow $100,000, now you have $90,000 for your family. I'm not done.
Right.
Listen.
Okay.
The way the policies are written, the funny math in insurance companies, God forbid, you buying life insurance and savings or an investment. God forbid. Typically, how these policies work, if you pass away, the company, they'll give you that $100,000. But let's say you were expecting cash value, the company gets to take 100% of all that cash.
What? How is that fair or legal?
It's written in the policy. Most people don't read it. It's the industry pushing the product instead of educating the people.
So let me see if I get this right. If I buy whole life insurance or cash life insurance, and first of all, I have to borrow my own money, and if I pass away, I don't get, how I'm hearing is like the interest that accrued on the money. I don't get the interest and okay, go ahead.
So what you're overpaying your premiums to get the cash value. So that overpayment, they pay it to you in what is called dividends or interest. You don't get that. Now, in these IULs that's being marketed heavily, what happens is if you want the face value, the 100,000 and the 76,000 of cash value, you have to pay more to get that.
What? Oh my goodness.
Yes, you're paying over 1,000% higher for a policy for that cash value.
Okay, Marcus, I just need to ask this question because does your company sell whole life insurance?
None.
It doesn't.
We don't
Okay.
offer it.
Okay, because I'm like, you are being real bold right now on camera.
Oh, yes.
You've been real bold. Okay, so your company doesn't even sell whole life insurance. But again, it goes back to the person that started the company, what he experienced with his family. Okay, so I get that. We have talked a lot about the benefits of having life insurance. Are there any cons to having life insurance?
The major con is having the wrong type of life insurance. Again, the industry pushes so much cash value, cash IULs and whole life, and make it so confusing.
Mm-hmm.
The con is buying the wrong type of life insurance.
Okay. Which, I mean, where someone like you would come in for the education piece on,
Absolutely.
This is the type of life insurance that you would need for your family whenever you pass away. And this next question may seem like a duh question, but is there anyone that does not need life insurance?
Okay, great question. Life insurance is based on if a person needs your income in order to survive.
Okay.
So if your family members, if you have family members that depend on you for your income, if you have kids, you need life insurance. However, if you're single, you're young, the need for life insurance is very low. So you can get a plan, but you don't necessarily have to get a whole lot of life insurance.
Okay. Is it ever, and I know you said that, when you're younger, less health complications, it's the best time to purchase life insurance. Is it ever too late? Are you ever too old to buy life insurance?
Yes. So there are age limits in our company. In general, a 70-year-old is the cutoff limit. However, technically, you can have life insurance coverage all the way up until you're like 95 years old. So with our company, that is. So, but you can have life insurance. Different people can buy life insurance, especially, if they're old, have health complications, health issues, they can't buy a policy, they can get coverage between 70 and 100 years old, typically.
Now, we touched on this briefly early on in the podcast, but is it more expensive for men to purchase life insurance versus women to purchase life insurance, and why would that be?
Okay, again, it's based on mortality tables. Men, statistically, you can Google it, just Google it. Men pass away faster than women. Okay, so with our companies, rates have come down with women that young and healthy. You can get life insurance a whole lot cheaper because, again, you live longer. You take care of us, you end up taking care of us.
Thanks for that.
Yes, yes, absolutely.
Okay, does life insurance, does it kind of guesstimate, like as you're going through the process and filling out all the paperwork and everything on the computer, does it guesstimate when they perceive a person to pass away?
So just like you're buying a house, there's underwriting. So it's like almost a credit application. All your information, my information, is in what they call the medical information board, and they can see our medical history. So the tele underwriting, where we don't have to necessarily have a blood test, they'll tell you all your medical history in under a minute. If you have some situations, the underwriting takes a longer process, and we'll have to obtain medical reports and documents.
Where do they get that information from?
Medical Information Bureau. Everybody has it.
What? So they can just request that information, and then from there, just guesstimate, okay, Crystal Petrie is gonna live until whatever age.
Exactly. So we can issue a policy based on your medical history in under a minute because of technology.
Do you still have to take, because I remember back in the day, you used to have to take like a medical exam and blood test and all of this stuff before you got a policy. So do you not have to do that anymore?
Yes, we still do. So with our company, we do tele underwriting for coverage under 300,000 and less. We don't have to do any blood or urine. Okay. However, if you're getting a 300 plus policy, we're going to do a blood and urine.
Okay.
So we do a little bit more specific. And a lot of people try to figure out why they have to do that. Well, you can tell me all day you don't smoke marijuana. However, when you do blood and urine, it's going to show up. So we know the tobacco that's in your system, even if you told me on the application you did not smoke, because it's in your blood and urine. Well, we have proof.
If something like that comes up, like the person smokes weed, they smoke cigarettes, or they have a pre-existing condition, do you still give them a policy?
Yes.
Or sell, rather?
It happens all the time. It's what you call being rated. So let's say, for example, your height and weight is different than what you gave me in the application in your medical information. Well, you pay a higher premium. If you have diabetes, you pay a higher premium. You have different health issues, you pay a higher premium. It's rated. It doesn't mean you can't get life insurance. It means that you pay a higher premium.
Okay.
Because you're a higher risk.
I see. Okay, so one of the reasons that I really wanted you on here, and you've been doing that already, is to educate me and educate my audience about life insurance. But a lot of times when we get these policies and these 20 pagers, it has all kind of words and stuff on there. We have no idea what this means, so we just gloss over it and go to the next thing. So this next kind of set of questions is just like, what do these words mean? The first one is, what is a policy holder?
The policy holder is the policy owner. So I don't necessarily have to be the person that's insured. The policy holder is the policy owner. I'm paying for the policy.
Okay, so the policy holder, so if someone's husband got insurance on their wife, he's paying the policy, so he would be the policy holder. Okay,
Yes,
okay.
absolutely.
What about death benefits? What is that?
Yes, the death benefit is how much coverage that you have. Just like, for example, car insurance. That's how much you're going to get in the event of an accident. So a policy, the death benefit is also called the face value. How much coverage you have. If you pass away, how much will the company pay?
Okay, so while we're on that topic of death really quick, of course, the price of funerals is skyrocketing. It's so expensive to die. Like, I'm just gonna say it, it's so expensive to die these days. How long does it take to get the money from the policy upon someone's death? Is it immediate? Is it a day?
That's a great question, Crystal. So my mom passed in December. What happens is you have to wait for the funeral home to get what is called a death certificate. And you file a claim immediately when they pass away. But once our company gets a death certificate, the policy gets paid about 14 days.
So should the person wait 2 weeks to bury them, or do you get reimbursed?
Okay, excellent question, because most people don't know how it works, and most people don't even want to know or think about it.
Yes.
So what happens is, when you let the funeral home know you have a policy, the funeral home will call the company and find out, hey, look, what type of policy you have? Is it in force? They'll let the funeral home know every single thing. Okay. So in the event that my aunt passed away, and it was going through the incontestability period, well, the family, well, my cousins, they were well taken care of. They had the money. They had to pay up front, but Primerica reimbursed them once everything. They got all the death certificates. They went through all the affidavits, things like that. So that's when they paid.
Okay. So the insurance company, not the insurance company, the funeral company would call and say, does this person have coverage? How much is it? And kind of with that promissory note, they will go ahead and bury, and then the insurance company will just mail the funeral home the check, or does the family get the check?
No, they mail the funeral home the check.
That's probably smart. That's probably smart. Okay, so what is a premium?
Okay, premium is the amount you pay every month.
Okay, so just like the utility bill, you pay that every month. What is a beneficiary?
Beneficiary is the person that's named on the policy to receive the death benefit.
Does that have to be the spouse, or can that be anyone?
You can name anyone on life insurance. You can name a trust, you can name a church, you can name a dog. Whoever is the beneficiary receives the benefit.
You can name a church?
Absolutely.
How does that work?
A lot of people that I know are benevolent, and they would love to give a donation to the church upon their passing. Or, if a single person has lived their whole life in the church, the passing has been a great benefit, they oftentimes leave a benefit to the church.
You know what? That's what, as you're talking, I'm thinking, that's what, like, nonprofits, they, like, when people pass away, they leave the estate to, like, a college or a nonprofit, or that's what that is.
Absolutely.
So you just write that into but do you need to have someone to take care of it? I mean, you can't just say St. Jude, right?
So the benefits usually go in a trust.
Okay.
And I'm not an estate attorney.
Mm-hmm.
So usually the estate attorney or the executor of the will handles the passing of that.
Oh, okay. That makes sense. What is a rider?
A rider is something in addition to. So child riders are usually the addition to. There's something added to the policy that's not originally in. So I can add my kids as riders on my policy.
And what does that mean? Does the kid get the money when you pass away?
So my kid, like my son, for example, my policy is written. I have my wife, she's insured, and my son, because he's not 18, as a rider on my policy. He's also covered if he passes away. He'll be taken care of. We don't like to think about our kids passing away, but he's covered. They don't bring in any income. All the money is out. as far as kids. So we don't recommend to get a whole lot of life insurance on the kids because they don't bring a whole lot of income. But a rider is anything that's in addition to the policy. We also have terminal illness riders. God forbid something that happens to you and a doctor diagnoses you and you have 24 months or less to live. Well, the company will release 40% of the death benefit up front. Then upon your passing, they'll release the other 60%.
The 40%, is that for like the health care while you're still here?
Yes, absolutely. It's what you call a living benefit.
Oh, can you get that under term life insurance?
Absolutely, yes.
With children under the age of 18, can children have their own life insurance policy, or do they have to get a rider?
So, a disclaimer, our company works different from different other companies. You can get a policy on a minor with other companies. You have to be a rider on our policy or a policy owner, okay, with our company. But yes.
Is there a certain amount that someone could get on their child? Like, is there a cap? You can't get any more than 20,000, or can you just get however much you want?
Right. Our cap is 50,000 on kids, on the minors. Yes.
And why is that?
Well, again, the way our founder saw it, kids they're not the breadwinners of the family.
Mm-hmm.
So a person that gets $1 million policy on a kid, it doesn't really make sense. Yeah.
That doesn't even sit right with me in this interview, just thinking about that. Not, that's just me. I'm not saying, how to live your life or spend your money. I'm not doing that.
Yeah.
Okay, what is your personal intention? And you are so passionate about this. Like, I can clearly see it and feel it. And even when we spoke on the phone, I could tell how passionate you were about this. But what is your personal intention in the space of life insurance?
To educate and crusade. I'm not just a life insurance salesman. I educate. I empower. I want people to know what they have. I want people to make better financial choices and not just have life insurance, but have some money at the end of the term. When you sit across from me, when I'm doing business with you, I'm not like the rest because you're going to get the whole gamut, not just life insurance. You're going to be empowered. You're going to feel like that passion that you're feeling right now.
Yes.
You're going to get taught. You're going to get help. You're going to be uplifted because of the value that I bring.
Okay, and this is an off-the-cuff question, and it's not on my paper. Do you do conferences? Like, do you go and speak at churches and non-profits and different events? Because you should.
Absolutely, absolutely. Yes, I'm aiming. Yes, definitely. Please invite me to speak.
Yes. So, okay, if somebody wants to invite you to speak at a conference or a health fair or something like that, how can they get in touch with you for that?
Sure, absolutely. You just contact me. We'll negotiate everything. I'm available. Just let me know.
Okay. Explain the ratings for insurance companies.
That's one of the most important parts of the contract. Is the company going to pay? AM Best is an independent third party.
Okay.
It rates all insurance characters. Every insurance character has a rating. So you can Google your company and find out what does AM Best rate the company. If it has a A+ rating, it's in good standing. It has a reputation of paying the policy. So that's just like a bank that have FDIC insurance. Are they going to pay me in the event of insolvency? That's what insurance companies are. They have a rating. So you got to find out what is the rating of your company.
Is that something, I would assume you need to do that before you purchase your life insurance from the company, correct?
Absolutely.
Okay, so you said that an A+ rating is a company that is more than likely to pay out, which to me sounds like there are some companies that do not pay out.
Absolutely. And lo and behold, it will be, if I name the companies that don't pay out or it's harder to pay out, everybody would be on the floor. It would stay up. Yeah.
We get more views though.
Oh, yeah.
So, is that illegal? I feel like that should be illegal. I've been paying my term or my whole all these years, and then I pass away and my beneficiary doesn't get the payout?
Absolutely, absolutely. What happens is companies become insolvent and they don't disclose to the policy owners what's going on. So, lo and behold, they get a rating, or if, let's say, you have to haggle with the company in order to get your money. All of that is in their ratings of AM Best. So you can find out, just like a Better Business Bureau, AM Best is the rating company of insurance.
What is insolvent? What was it?
It's like bankruptcy. If they
Oh.
can't pay. Okay, yes.
Don't they have to disclose that to you?
They should. They should, yes.
But they don't.
Well, yes.
Okay.
If they're going out of business, they should disclose it, but depends on what's going on.
Okay, so we need to, before we get with the company, Google so we just Google like whatever insurance company's rating.
First, go to AM Best. Google
Okay.
AM Best, and AM Best will you type in your insurance carrier, and AM Best will show you their rating.
Okay. Is burial and final expense insurance a type of insurance? It's in the name as I'm asking this question, but so I'm assuming that's yes.
So, final expense policies are policies that typically funeral homes sell.
Oh,
Those are the policies. Not all funeral homes, but most funeral homes sell the final expense. Well, those are types of policies, yes. Now, it's a burial policy, for your burial, but typically they're like $10,000 or $20,000 policies.
okay. And you just get those directly from the insurance company. Okay. How can life insurance help you avoid paying taxes?
Normally, usually 99.9% of the time, a death benefit from life insurance is free from taxes.
So the money, the $500,000 that I would get if my husband passed, and this was something that we talked about earlier, if the breadwinner, the husband or the wife is making $50,000 gross, you get 10 times that amount, and that would be $500,000. When that is paid out to me, I don't have to pay taxes on that?
No, ma'am.
What? Does the government know about this?
It's written by the government. Yes, it's tax law. Yes.
So you do not have to pay taxes on the death benefit or the life insurance.
That's correct.
What? I did not know that. They got that part right.
Yes.
I mean, the government gets a lot wrong, but they got that part right. Oh my goodness, I had no idea. Okay, do you feel like you need additional outside life insurance even if you have life insurance with your job or with your company?
Absolutely, 100%. Here's why. The job owns the benefits. In a group policy, in general, you don't even have a policy. You have a certificate of issue. You don't see the policy or anything. It's the job's policy. Well, the normal person, the average person, changes jobs 7 times during their lifetime. Well, every time you leave the job, you leave what?
Oh, you leave your life
You
insurance.
leave the life insurance. You have to start over. You leave the benefits. So again, life insurance is based on age and health. So just imagine you starting over every time you leave a job. Okay? So that's the group policy. So when you leave the job, we encourage everyone to get a plan outside the job so they can own the benefits. You control the coverage. And there are horror stories. Let's say, for example, if you're on leave, okay, or you have COVID or maternity leave, well, you're not an active employee.
What about FMLA? Doesn't that cover that?
Listen, there are horror stories that says, hey, look, because you're not active, therefore you don't get the benefits. So if you pass away during that time, you're not going to get any benefits. So that's why you always have a policy outside the job. You control it, you own it.
What? You are really like, I have so many I cannot believe it moments during this podcast. That is crazy and so unfair. Okay. Okay, life insurance, and this is just my point of view. It doesn't have to be everyone's, but I feel like life insurance, like the policy, is so wordy. I feel like they give the illusion of wanting to help, but when you start reading all of that and you got to sign, like feel like you're signing your life away, are they really trying to help or just make money?
So our company, the exact same words. It's the industry has made it confusing.
Yes.
Well, our company has simplified it into under 15 pages. And it's just titled Our Promise. So it names who the insured, the beneficiary. Those are things that you should make certain that's in the policy.
Okay. What is the most important thing, and I'm sure there's a lot, but what would you say, in your professional opinion, is the most important thing that customers need to look for when they're looking for life insurance?
Definitely for me, I'm a price guy. I'm looking for affordability.
Yeah.
Okay. I'm going to shop the best rates.
Mm-hmm.
That's number one. Number two, the rating of the company. Is the company going to pay? Okay. That's number two. Besides price. Mm-hmm. Number three, the reputation of the carrier. So many companies are out there. They haggle about they try not to pay. So the reputation of the company is, you always get a referral, things like that. So reputation, price, is the company going to pay, are some main things that we should be looking for life insurance.
How often should someone go over their life insurance policy? Because I feel like once I sign the paper, I didn't sign my life away. It feel like that thing go into a file cabinet and it stays there.
Right. So you ought to review your policy when major life happens. For me, for example, you have beneficiaries. I have my mom as a beneficiary. I need to update my policy. You get married.
Oh,
you have extra children. You have children. Those are times, major life changes, when you definitely need to review your policy. You have an income. You get raises. Your income goes up. So all of those are times, are special occasions when you need to review your policies.
Is life insurance, and I hate to word it like this because it sounds horrible, but is life insurance a great way to put your spouse or your children in a higher tax bracket whenever you pass away?
Not necessarily. The purpose of life insurance is not to make up the more income. Okay, that's not the number one priority.
Okay.
It is. It will benefit you because of the non-taxed state.
Yeah, it will.
So, but yes, that's not the number one priority. It's about taxes.
Okay. What happens if you pass away before, is there ever a time, as I'm asking this question, I'm thinking of another one, either with term life insurance or whole life insurance, that you completely pay it off? Does that ever happen?
Okay, So there are what you call paid up policies.
Okay.
There's a 10-year paid up, 20-year paid up. So you can actually pay off the policy. Okay. Yes. So you'll get a death benefit when you pass away, but you can pay the policy off.
So after the 10 years, say you get the 10-year term, you pay that completely off. Okay, and so I'm guessing you just don't have to pay it anymore? Or does the 10-year term like stop?
Now, there's a 10-year, 20-year, those are those cash value policies. So you basically have the coverage all the way up until 100, okay? And those are the type of policies that you pay them off.
Okay, yes. What happens if you pass away before you pay off your policy?
Great question. So you'll get the amount that you paid into the policy. And this is what happened to my mom. They bought a final expense policy from the funeral home. And they had like a 20-year policy or something like that. And when my mom passed, they were not finished paying off the policy. So they got what was in the policy as far as the cash value. So it was little or nothing. We still had to come up with money. Thank God that she had it, but still have to come up with money because of the lack of education.
Absolutely. You said earlier in the podcast that people lie on their life insurance applications. Why would people lie on their life insurance application? Is there a benefit to that?
Well, there's fraud, and there's just omitting things. For example, a lot of people try to hide health conditions in order to get covered. Lo and behold, again, the Medical Information Board will find out what's in your records. We have a record of that. If you're applying for a maximum policy, we're going to call your doctor. We're going to get those records. The company is going to do the underwriting. And then there's fraud. There's intentional deceiving the company, saying people, you don't smoke when you know you smoke. So absolutely, people do that to get a better rate, because a non-smoker will get a better rate than a smoker.
Oh, okay. You have been, oh my God, you have been so good on this podcast. Wow, Marcus, you've been amazing. So I have a couple more questions and then I will let you go, I promise. If there is one thing that you could tell people about life insurance, what is that one thing that you feel like you absolutely need to do this, you absolutely need to know this?
I would say get over the fear of getting a quote, because most people think life insurance is 6 times higher than it actually is. When I'm in front of people, they say all the time, man, that's not bad. Well, you thought it was going to be some astronomical number when you can get affordable policies if you just open your mouth and get a quote. So that's number one, because getting covered can mean a snack. Just it's simple, it's affordable. It's so easy getting coverage these days with the tele-underwriting, because I can be on Zoom and insure a person in California. So tele-underwriting has made it so easy to get covered.
And I feel like people need to get over the dying. Like, people don't want to talk about death. They don't want to think about death, but we all are going to die. So life insurance is definitely something. And I also feel like, and I know I keep saying I'm gonna let you go, but I also feel like life insurance is for the living. So it's for the people that you leave behind,
Absolutely.
to help them.
If God forbid if something were to happen to me, okay, my wife would not have to sell the house. She would not have to sell the cars. She would have a pot of money, let's say if it's at that $500,000, she could put that into an investment account and pull 10% a year from that investment account and have the same income as if I were living. And that's that's our crusade. We don't want the family to suffer when the agents, this industry is so important. If we just educate families on making right choices with their money, right choices with their life insurance and their investments. Hey, you don't have it. The loss of a loved one would be devastating, but financial loss does not have to be that devastating.
Oh, yes. Yes, yes. And we are going to end it on that, Marcus. Okay, my final question for you. Who do you think will make a great guest on the podcast, but you have to help me get them on?
I think Karen Prater Young, tax lady, will come on.
Okay, perfect. I don't know how many views we're going to get with that because people don't like taxes. But they need to know about them. They need to know about them, just like they need to know about life insurance. Well, thank you so much for being on the podcast and educating and just being so bold and honest about this space and this career in this field of life insurance. I appreciate it.
Thank you for having me.
Absolutely. And thank you so much for tuning in and watching. You can get Marcus's podcast and all of my other podcasts on YouTube and Apple Podcasts. And remember, you always have time to listen and learn on the go.
Come on, let's go on a journey. Sit back, buckle up, enjoy the